10 seconds before the release. Stand by.
Eurozone unemployment rate 9.3% versus 9.2%.
The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody. Welcome to the webinar Eurodollar and its many moving parts. The webinar is brought to you by OctaFX, an award-winning broker that has one of the lowest spreads in the industry. Okay. Some housekeeping before we begin. Risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. And here are a few words about myself. My name is Yohay Elam, I'm a Forex analyst. I used to be a retail trader and a computer programmer. I founded Forex Crunch back in 2008, and in this webinar and in Forex Crunch I focus on fundamental analysis. Now, today's webinar is the first in a series of webinars about specific currency pairs. We already have one recorded webinar which is an introduction to fundamental analysis, all the things you need to know, and beginning from now, we dive into specific currency pairs. Today, we start with the world's most popular one, Euro-Dollar, and then we have another one about Dollar-Yen, and many more currencies. Please follow the schedule. So today on the agenda, a few facts about Euro-Dollar, what makes it special, what makes it important. Then the basics of the basics, why the pair is basically bid, okay? Third thing is why, despite being naturally bid, it moves not only on the natural forces but also on speculation, and we'll discuss the main force, monetary policy divergence, talking about common themes, and why it's complicated, why things make it sometimes a bit more complicated. We'll also touch on technical stuff here, but most of it is fundamental analysis. So, a few facts about Euro-Dollar. The US. The US is the #1 world economy, and the Eurozone combined, all the 19 economies together, are #2. Together with China. China and Europe are 2 and 3 more or less. Europe is a bit bigger. The Eurozone is a bit bigger still, despite the rapid growth in China. Close to a quarter of foreign exchange is traded in Euro-Dollar, 24%, okay? And the next currency pair is Dollar-Yen, far behind with 18%. So by far Euro-Dollar is the world's most popular currency pair. If we take a currency pair, that means two currencies, we have 200% in total. The US dollar is traded 87% of the time, okay? The US currencies that include the US dollar are majors, minors, the rest are crosses, okay? So the US dollar has a dominance here, but also the euro is quite important. It's 33%. It's one side of the currency pair, okay? Now the US dollar is special. Not only is it traded so much, again, major pairs are US dollar pairs. The United States is the world's only superpower at the moment. Well, of course, economically we have China, and in the past we had the Cold War and we had the Soviet Union, but US economy and the US is dominant. It's the world's reserve currency, and most importantly, oil prices are quoted in US dollars. So the most traded commodity is priced in dollars. Okay. Also, the euro is special. No less than 19 countries in the Union. Of course, some countries have a bigger impact than others. We have small countries like Malta, Cyprus, and Slovenia, all great places, but when we're talking about impact, we're talking about the bigger countries. We're talking about Germany, first and foremost, then France, and then Italy and Spain, the 4 big economies of the Eurozone. And the Eurozone, which exists as the union of currencies since 1999 and as a physical currency since 2002, is more of a political project than a monetary one. And this has a lot of complications and issues. So it means that it's not a group of countries which are very similar. If we take the most extreme example, Germany and Greece, two countries that begin with the G. German economy is large, unemployment rate is low, it's very productive, lots of exports, and the Greek economy is, well, small, deteriorating, and of course there are many other differences. So also small countries can sometimes have an impact. Another thing is that it's sort of a one-size-fits-all. There's one central bank for the Eurozone, but no central finance ministry. And the European Central Bank has one mandate: to control inflation. But inflation can be faster in some countries, while at the same time slower in other countries. That's one of the things that we had before the crisis, that the interest rate was too high perhaps for Germany, but too low for Spain, for example. That's why there was a housing bubble in Spain. Okay, that makes things complicated. And well, we talked about debt crisis, about what we had in Greece, also Portugal, Ireland, and banking crisis mostly in Spain and in Cyprus. Okay, and these banking issues and the debt crisis are not over. There's always a kicking the can down the road, always something lurking in the background. Well, let's talk about the advantages of Eurodollar. It's the most popular currency pair, most traded one. We already mentioned that. That's why it enjoys high volume, high liquidity. You don't see many, it's rare to see gaps or big gaps. You don't see these air pockets, what I call them, when you see the currency pair dropping very suddenly or jumping, because all along trading there are orders, sell orders, buy orders. That makes high volume, high liquidity, and it's tradable. Of course, low spreads, okay, everywhere. Spreads on Eurodollar are very low. It gives an advantage over trading a rare currency pair across, such as, I don't know, Canadian dollar against the South African rand, okay? And there's lots of analysis, so you have lots of information if you want more fundamental, technical, so that's also, of course, an advantage of being the most popular currency pair. And long-term charts, if we talk about technical stuff, long-term charts are usually very telling. So sometimes you can see a trend line that began in 2005 and it's still relevant, and the break below that channel or above that channel is very significant for the bigger trend. Okay, that's something that I've observed over and over again. Okay, now let's talk about the second point. Let's dive a bit deeper. The pair is basically bid. When I say that, what do I mean? That Eurodollar has support, that if nothing happens, the pair goes up. Let's explain. The Eurozone has a trade surplus of around 20 billion euros. That's thanks to German exports, mostly to China, but also other countries. Basically, the Eurozone exports more than it imports. Okay, so there is a positive trade balance. Okay. On the other hand, the United States of America has a deficit of about $40 billion. That means that the United States needs to import more than it exports. Okay? So what does that mean? Well, and also more specifically, 6% of Eurozone imports come from the US, but 13% of exports go to the US. So even if you look specifically at the trade between, on both sides of the Atlantic, between the Eurozone and the United States, the Eurozone has an advantage. And what does this mean? This gap in money, this gap means that money is flowing from the United States to Europe, okay? When we're talking about international trade. And to balance the gap, Eurodollar needs to go up. So it needs to jump even, okay? So again, when nothing else happens, Eurodollar goes up. If foreign exchange were only dependent on trade, on buying cars, olive oil, you name it, it would the Eurodollar would be much higher to balance this trade deficit. Okay. So no news is good news for euro dollar, usually. Okay, so when nothing happens again, it's positive for the euro. Okay, but now our third point continues, and of course you need to balance things out also here. Monetary policy divergence, that's the main driver of the pair, and that's why things are not always, again, on work according to nature, according to trade balance, but because there is speculation about central banks, we have very different movements. So monetary policy is based on economic indicators, and that's the biggest mover. And monetary policy, if the interest rates are higher, if they go up, it's a stronger currency. That's why the US dollar, the past few years, if we look at the big picture, is stronger, okay? And another factor in monetary policy is quantitative easing, money printing. We talked about both things more in detail in the first webinar about fundamental analysis. So if you have more of the currency, it is weaker, okay? That's why the euro is falling in the past 2 years. I mean, in the bigger picture, okay? But the direction of travel is more important than the current situation. So, and now I'll talk a bit about what's happening now in markets. Again, trying to keep this webinar a bit more generic, but the current interest rate is in the United States is a range between 1% to 1.25. In the Eurozone, the interest rate, general rate is 0, and the deposit rate is negative, minus 40 points. In the US, they plan in the future to squeeze the balance sheet. That means to have less money out there, to reduce the amount of money, and this should be dollar positive. Less of something makes it more valuable. And the European Central Bank, on the other hand, buys 60 billion euros worth of bonds, of corporate bonds, government bonds every month. So if we look only at these details, okay, higher interest rate in the United States, and in terms of the balance sheet, it's going also in favor of the US dollar. However, this is the situation now, and what matters is the direction of travel. So in what we're seeing most recently is that the European Central Bank is becoming more optimistic, and it's going to end the money printing scheme relatively soon, okay? Relatively soon means in half a year, but central banks move slowly, and the prospects are for printing less money in the Eurozone. On the other hand, in the United States, the Federal Reserve, the central bank there, has doubts about inflation, okay? So they could wait with the next rate hike. So even though the United States, in terms of monetary policy, has an advantage over the Eurozone, Euro-dollar is going in the other direction because of the change, because of the expectations, because of the direction of travel, okay? And that's a point, well, I said it many times because it's a key point. Expectations move currency, speculation more than the natural stuff, if you wish. And our fourth point is why things are complicated. That relates to the first point as well. When you have lots of information, lots of analysis, it's sometimes too much information, too much noise in the short term. So that's why we see euro-dollar, one of the characteristics is that sometimes it trades very choppily in a narrow range. Once it makes a breakthrough, a breakout, to the upside, to the downside, it's a bit more meaningful, and long-term moves are more meaningful, okay? But in the short term, it's too much information, too much noise, okay? Sometimes you can have analysis paralysis. The pair, again, can get stuck in a wait and see mode, and so do traders, because they have just too much information, okay? My recommendation is try to stick to a few analysts that you like, and follow them, but not don't try to follow everybody. You'll just be reading and analyzing charts all the time and never trading, okay? Another thing, with euro-dollar, you never know when the next crisis will come. We had 4 or 5 rounds of the Greek crisis, for example. We had issues with Italian banks, with Spanish banks, with Irish debt. You never know when it'll come. We had a surprise crisis from Cyprus, a country with a population of less than 1 million people. Okay, so you have lots of things you never know when it'll come from. It can be black swan, a gray swan, whatever you want to call it. Okay, and something to watch out for. In 2015, not that long ago, 2 years ago, we had a temporary change in the reaction mechanism. Okay, these are big words. What I want to say is that the euro, for a short time, became a safe haven currency. Euro was so cheap to lend in euro that money went to riskier assets, and in times of trouble, including trouble in Greece, money was repatriated back to the eurozone, something that usually happens with the Japanese yen. So everything turned a bit upside down. That was very temporary, but since it happened, it can happen again in the future. Okay, so that's something to watch out for. And well, in general, we talked about crisis. The euro is always under some kind of an existential threat. It has moved away. The euro looks stronger, more stable. Europe is more united, but you never know. But again, it's complicated, but also makes it more fascinating. That's what makes euro-dollar trading more fascinating, less boring. Okay, another thing I want to mention is that it's prone, on the technical level, it's prone to fake-outs. Breakouts which are false, which are not real. Okay, you have euro-dollar trading in range, and then moving a bit above only to come back below. Or move a bit below just to trade back into the range. Now, these kind of fake-outs, they happen with almost or every currency pair. With euro-dollar, it's a bit more common, so watch out for that. Always ask, is the breakout justified or not? And we discussed it in detail in the previous webinar. You can go back and watch it, how to identify if a breakout is real or false. And in general, with euro-dollar, because of these many fake-outs, if in doubt, stay out. The market will always provide another trading opportunity. If you're not sure, no need to trade it. There will be another opportunity much sooner than you expected. Okay, so to conclude this webinar about euro-dollar, which is the first in a series of 6 webinars that focus on specific currency pairs. In general, euro-dollar provides high liquidity, low spreads, and lots of attention, lots of analysis, lots of charts, lots of news, everything. Okay? When nothing happens, when there's absolutely no news, the pair moves gradually, slowly towards the upside. Okay? But sometimes always happens again. It's a pair with lots of attention, lots of news, many countries in the Eurozone, many things going on in the US. Something always happens. Central bankers remain the key drivers of the euro. Okay? And beware of fake-outs, our last point here in the conclusion, and trade with care. Fake-outs happen everywhere, but a bit more in the euro, in euro-dollar, and trade with care, well, an advice which is always good. Okay, so thank you very much, everybody. Comments and feedback are more than welcome. Please do join us for the next webinar, which is about dollar-yen, and then we'll have about pound-dollar, Aussie, Kiwi, and CAD. And join the regular webinars, and you can see the schedule on the OctaFX website. So that's it for euro-dollar for today. Comments and feedback are welcome, and see you soon. Thank you, and bye-bye.